Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Tuesday, November 2nd. Great to have you here with us. I'm your host, Jesse Allen. Thanks for joining us here today, as it is a bit of a special episode today. 1 year anniversary of the show. We launched this 1 year ago today, and been happy to be part of your days. And thank you so much for making Market Talk what it has been the last year and continuing to grow. Find us again online, markettalkag.com. Find all of our streaming sources and much more there. It's all online, markettalkag.com. Plenty to talk about today. We saw quite a bit of profit taking throughout the grain sector. Let's bring in our good friend Bill Biedermann with agmarket.net joining us here this afternoon. Bill, great to have you back on the show, sir. How are you?
I'm doing real good, Jesse. Thanks for having me on, especially on your anniversary date.
Yeah, 1 year. Honestly, I forgot that it was 1 year until today, and I saw some memories pop up on my social media. And I went, "Oh boy, this is an important
Yeah,
day."
you've come a long way. I mean, I love going down the road on Sirius FM or whatever it's called, Sirius Radio, and
Yeah.
hearing down there, it's great.
Yeah, we got the stuff with SiriusXM, and obviously this show could be downloaded everywhere and streamed. So a lot of great stuff, and wouldn't be what it is without folks like you. And I know you and the team there at agmarket.net have been great partners with me here on the show. So
That's
we
good.
thank you for that.
But
Bill, we got plenty to talk about today. We looked at this market. We saw some good strength overnight. That faded, especially in wheat. Although spring wheat did claw its way back a little bit after we saw the big sell-off and profit taking there. And in corn, we saw some profit taking as well. And it just felt like maybe, a bit of a correction from maybe a little bit of an overbought situation is kind of what I gathered. What are your thoughts after today's close at the action we saw?
yeah, the you're absolutely right. We went all the way up to the downtrend line on December corn that's drawn off the May high against the June high, and that line crossed exactly where the market topped out today. So we were seeing some profit taking. We also saw a pickup in farmer movement, which kind of backed some of the cash markets off. The cash markets are still very, very strong. Like the SIF market's still trading at 63 over, which is an absolute unbelievable price. And FOB is a $1.35 over. So very strong cash markets. So yeah, this is a sell-off. We're due. Hey, like 17 days ago or something like that, we were at 506 for a low, and today we were at 586. So I think that's like an 80-cent rally in about a half a month. So pretty amazing.
Very amazing. Corn really looking really strong here. And, wheat as well. Wheat's kind of been our leader, especially I know that spring wheat market, even though it's thinly traded, has really, rallied itself higher as well. And I mean, we were closing in, and we still are on $11 spring wheat on that December contract. And that's helped pull Chicago KC wheat up to that $8 mark yesterday. I mean, there's there's a lot of strength here. But I'm with you. I think it was we were due for a bit of a correction here, and we got that today.
Yeah, and it would be healthy, honestly, if we maybe did a 50% correction of the move up. So, if we do that, you could be looking at 40-cent sell-off. I don't think it'd be that great, but we really do need to pull back a little bit, make sure that the demand is with us and that we're not leaving them in behind. Another market that's just been really amazing, Jesse, is the oat market. Oats, it almost looks like a lumber chart. I mean, it's at $7.60. That's $1.90 above corn. I mean, it's just mind blowing when typically oats trade at $3 and at always a discount to corn. It's a big one. And the other thing you mentioned was the wheat and the Minneapolis wheat. And with that, we're going to see a response to acres. And honestly, we kind of think that the bulk of those acres, if the weather will cooperate, is for this soft red wheat acreage to bump. Um, and then we would return to a more normal ratio between Kansas City, which typically carries a premium in the wheat market over Chicago, but has been actually Kansas City has been at a discount for the last couple of years. So, there could be a pretty corrective trade there coming in the future too.
Yeah, and you mentioned acres, and that was going to be my next question. That's what it feels like to me is that right now, especially the wheat market, the oat market, you alluded to that as well. Really trying to buy acres here as we start to make decisions going to next year. Obviously, we have high input costs when it comes to corn, so there's some concerns there. Will we see corn planting reduction going into next year? Will some of those acres go to wheat? And oats to some extent? Will we see soybean acres there? I mean, it really feels like that part of the reason we're moving some of these prices higher is a battle for acres, Bill.
Yeah, so we did a study on the fertilizer, and the last time fertilizer had a move similar to this was 2007 going into 2008. And in that period, we saw soybean acres jump 10 million acres and corn acres drop 7. So if we just take half of that move and we take 3 million acres off of corn, that leaves you with 90. And I mean, there's no reason to believe it would be more or less than that. And if we have a 179.55 pipeline requirements, so we had a 1.236 carryover this last year, and we were all run out of corn. So if it drops below that, it would be extremely bullish corn. I don't think the market's going to allow that. So you either have to correct the fertilizer situation and drop price, which I don't think can possibly happen because that has to do with tariffs, COVID labor problems, logistic issues. I mean, that's so big. I don't think they can turn that vessel around. So that would leave only one thing to correct a farmer from moving away from corn acres, and that would be price. So I think the D's 22 corn either has to go up or soybean prices have to go down, but we have to do something to make sure we get those acres of corn.
And that's very, very true. And, I think farmers, just some of the chatter I'm hearing, they're looking here at their marketing plan as they get to the end of the year, they wrap up fall harvest, and, they're looking at what we have right now in these front month contracts and whatnot, but they're looking out to 22, they're looking out to 23. They're looking at some of these levels and they're looking for different strategies to maybe sell a little bit or get a put in place or something of that nature, just because the price levels are good, but there's also, it just feels like there's room to run higher in corn specifically, and even maybe wheat as well, Bill.
Well, that is the case, and I don't think that trend is going to stop easily. So one of the proactive things that we've been recommending, of course, we had pretty much everybody we work with were advised, and they either implemented or they chose not to. But we bought a lot of fertilizer between $700, well, right around that ballpark, and of course it's 1,000 now and 1,500 in some counties. The problem is, I don't know if we're going to have the weather to get it put in, but we took a proactive stance and we sold about 50% of next year's production in the November 22 bean market, and we did about 20% with either futures or HTAs, and we did about 30% with options. So actually, if the market rallies, we've got a window all the way up to $13, or in some cases $14, where we can still gain on the market. But we've got a floor put in on this, and we just want to make sure that if we do see that acreage shift, these beans could get buried. I mean, you could end up having an 500 to an 800 carryover in beans if these acres shift, opposite of corn. So we're staying long the corn market. We've sold 10%. That's it, just to get our hands, into the market. But we really think that the corn market will move higher or the beans will move lower. Either way, we're in position for that.
Well, and you talk about the bean market as well, and everyone's talking edible oils and all of this surrounding renewable fuels, which is a story and is something that we're going to be watching in this market, I think, for the next couple of years to come. But the thing is that I feel like we got to keep in perspective that this isn't something that's going to happen overnight. And I've talked about this on the show as well, that even though that demand is there and this story is there and it's going to continue to increase, it doesn't feel like it's going to be something that's going to necessarily lead to higher prices for soybeans as we move into 22, especially with considering that we could see more soybean acres, Bill.
That's right. I mean, you've had some really good discussions on this in previous shows, and that is exactly the deal. I mean, this is definitely a breath of fresh air for people, especially who are getting into the operational or the management side of farming in the next year or so, or have been working into it. It's a great breath of fresh air, but you can't bank on it yet because the demand is down the road. So the only, I would say, outside demand that we suspect that could come in between now and spring would be New York money. So if all of a sudden the food inflation story becomes a reality for investment money, they're going to buy commodities. And one of the cheapest commodities on the board right now relative to other commodities is corn. So I think you could see a really good push on this market if you start to see fund activity. Now, the funds have in the last week started to trade more. They were trading like very small amounts. I mean, they this summer they were trading 10 to 20,000 contracts a day. They've been trading about 1,000 to 2,000 contracts up until just the last few days. And I think yesterday they traded 14,500 contracts of wheat and 15,000 contracts of corn. So all of a sudden they're, excited about the market again. And if you see big up days with big fund value, you know that this inflation-based New York money could be looking for a place to get involved.
And I'm glad you brought that up as well, because I know we're talking about inflation and everybody's mentioning it. And we got the new month here, and it looked like we got some new money back into the markets here in the commodities. And I know we got Fed meetings this week, and it's something that with these outside markets and some of that New York money that I think folks are really paying close attention to, and it's something that I feel like we're going to be really watching in our ag commodities here as we go through the end of the year and into next year probably as well, Bill.
Yeah, I think that's going to be here's the deal about inflation. If you look at a cotton market, or if you look back at lumber, because lumber was the first indicator of inflation, that's where the craze went when COVID hit. Everybody wanted a house in the country. They don't want to live in the cities anymore. And that migrated over to other markets. But it's like a train coming down the track. It isn't going to be able to stop fast, and it will exceed expectations. Okay, so I had a guy buy some steer tires for his semi this week, $600. Now I sold all my trucks 2 years ago. I had 6 of them, and we would pay $320 to $370 for a good steer tire. So these tires have doubled. Parts, I know they've doubled. I bought a crankshaft not too far away, too long ago, and it was more than double of what I thought it was going to be. And my point being is that everything around us is going sky high. So, I mean, is it really hard to think that corn might exceed your upside expectations, that maybe $6 won't hold it? I mean, maybe we do go to 7, maybe we go to 8. I have no idea. Value-wise, makes no sense when carryovers got bumped the way USDA bumped them. But that doesn't matter, because it's just like those tires. I mean, there's not a shortage of them. There might be a shortage of getting them to your town, but that's the same in corn. There might be a shortage in McHenry County, but there's not one in Wyatt County, right? So my point being is, this thing could roll when New York money starts to get into this thing. It could go, and who knows where. So my point of that is to make sure you're marketing at a profitable level, but that you have some kind of a tool, whether it costs 10 cents or whether it costs 25 cents, it doesn't matter. Build that into your program so that if we do see that train coming down the track, you don't get run over by it. You get to participate with it. And then you'll be able to stay competitive and pay those outlandish rents that you need to be paying to have land.
That's great advice, Bill. Extremely great advice there. Before we wrap up today, cattle markets saw some good buying today. Hogs were lower. Any thoughts in the livestock trade at all that you want to share today?
Cattle were kind of a misfit yesterday. I think the sell-off was really just not, I don't know what it was all about, but today it got back on track. We've got cattle numbers tightening up. We've got a very current market. The box beef was very slow, but we started to see some price strength there. We're looking for a very big pickup there. The weights are down. Everything looks like it's current. So we think these cattle market got good feet under them, and maybe we'll see them kick higher. Hog market, I mean, the people I talked to in the hog market, I tried to get a guy who farrows 200 sows a day and tried to get him to buy some calls or do something 3 days ago when we were all the way down below $75. He wouldn't even think about it. He said, this industry is in big trouble. He says, I don't know what'll turn it around. So that's all I can tell you about the hog market. I don't know anything else about it.
Fair enough. Fair enough. Well, Bill, I know you and the team there at agmarket.net, you can help out producers with all the tools and technology you have to help them with their marketing plan. And it's very simple as just starting online or giving you guys a phone call, isn't it?
Yeah, that's right. We'll talk to anybody and it won't cost them anything. We'll just tell you what we can do. We can do consulting. We can do consulting and the marketing side. But we'd love to talk to people.
Agmarket.net. It's a great place to start. With that, Bill Biedermann from agmarket.net, thank you so much for joining us here on this Tuesday, sir. We will talk to you again real soon.
All right. Thanks, Jesse.
Bill Biedermann with agmarket.net joining us today here on Market Talk, the 1 year anniversary of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.